Inside America's Boardrooms, the informational show for board members and corporate secretaries. Brought to you with Knowledge Partners, Diligent, PwC, Center for Audit Quality, Spencer Stewart, the Conference Board, and corporate board member, along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, Donnelly Financial Solutions, and the Society for Corporate Governance.
Welcome to this edition of Inside America's Boardrooms. I'm TK Kerstetter, the CEO of Boardroom Resources and the co-founder and editor-at-large of Corporate Board Member Magazine. And it's my pleasure to welcome you to the show. Today we're going to be talking about the audit reporting model, or what is commonly referred to as a ARM. And joining me is somebody that knows a lot about this topic so that we can dig a little deeper. And please welcome Catherine Ide, who is the Managing Director of Professional Practice and Member Services for the Center for Audit Quality, or what we affectionately call CAQ. So welcome, Catherine.
Thanks, TK. Happy to be here.
So, the good news is that audit has been sort of just chugging along. It's most of the focus has been in other areas, and so we've been fortunate. But at the same time, there are some changes that are coming, and these have been a long time coming. The PCAOB has a new auditors reporting model, which until last year I don't think has been changed for decades. The identification and communication of critical audit matters, or what they call CAMs, is the most significant change required by the new standard. That portion goes into effect next year, if I'm correct.
Yes.
Okay. And so can you sort of clue the audience in on the CAMs and what the expectations are for this announcement?
Sure. So I'll level set a little bit with what the requirements are. So when I think about critical audit matters, it's helpful for me to visualize a funnel. So when you think about that top edge of the funnel, or the widest part of the funnel, are those matters arising from the financial statement audit that are communicated or required to be communicated to the audit committee? So as you move down the funnel, the next kind of filter is matters that relate to an account or disclosure that's material to the financial statements. And then the last filter is those matters requiring especially challenging, subjective, or complex auditor judgments. So what's left, so what's at that narrow end of that funnel, are those matters that will ultimately be communicated in the auditor's report.
And those are the CAMs.
Those are the CAMs.
The critical issues.
That's right.
So what do you think is, whenever these things come down, how much of an impact is this? What, is it affect the communication between the auditors and the audit committee? Sort of fill us in on what audit committees can expect.
Well, when we think about the potential impact that the new auditor's reporting model will have on the communications with the audit committee, we hope not much. And the PCAOB auditing requirements already require a wide range of topics that need to be communicated to the audit committee. And the new auditor's reporting model doesn't change those requirements. And that's why the PCAOB has said publicly that they don't expect the ARM to change or chill audit committee communication. Now, having said that, we would expect a lot of discussion about these CAMs because they're new, and we would expect a lot of dialogue between the auditor and the audit committee about what to expect as this change comes down the road. We at the CAQ published a publication to foster that conversation in spring of this year. And that publication outlines some of the key concepts of CAMs, as well as some FAQs for audit committees and others to consider as they engage in that dialogue.
Can you help me a little bit, and do you have any examples of what those critical matters types of issues they would be that sort of end up at the bottom of the funnel?
Well, I think that it will likely be a subset of critical accounting estimates that management discloses in the 10K. Whether that's things that require a lot of estimating on management's part would naturally require significant judgment on the auditor's part.
Right.
So goodwill, for example, may be if the impairment analysis is complex and there's not a lot of headroom, for example, or other types of complex matters that the auditor is going to need to spend an especially large amount of time focused on.
That makes perfect sense. That's what ends up at the bottom.
That's what ends up at the bottom. That's right.
In your view, what are the keys? Like, what is going to make it successful for these audit committees? Can you walk through what are the keys to success?
And just to be clear, the audit committees won't be going through that analysis. The auditors will be going through that analysis to see what drops down through the filter, because it's an auditor requirement. However, audit committees being responsible for financial oversight will be involved in that process with the auditors. And a critical success factor will be communication. And as the gatekeepers for quality financial reporting, I would expect the audit committees to be communicating with various stakeholders. And I'll start with the auditors and management. So certain auditors are going through a dry run process before the requirements for CAMs become effective, to prepare and refine their training and methodology related to the determination and communication of CAMs. Now, this dry run process also helps audit committees, management, and auditors understand what impact the communication of CAMs will be as they develop, and what potential impact CAMs will have on the financial reporting process more generally. So I would encourage audit committees to ask their auditors if they're going through that dry run process, and what are some lessons learned from the audit firms who are engaging in those efforts. And we at the CAQ do plan to publish something in December with input from those firms that are doing the dry runs to disseminate some lessons learned and some FAQs associated with that. Now, another thing for audit committees to think about is who they should communicate with within their organizations outside of financial management. So when you think about CAMs will be putting new and different information about the audit out into the marketplace. So investors may have questions about that information. And investors typically go to investor relations or corporate governance people within the companies that they follow when they have questions about things that are presented. And audit committees should be working to either ensure that those people are prepared to field those questions or put a process in place to make sure that those questions get answered. So early and often communication to promote an environment where no surprises will happen during the implementation and adoption period for CAMs.
So will this be something that ultimately ends up in a disclosure mode from the proxy, where an audit committee would be explaining the CAMs
They
possibly?
could be. Well, the CAMs will, again, auditor requirement. So the CAMs will be described in the auditor's report under a special section, critical audit matters. Now, the audit committee obviously has flexibility in the proxy and their disclosures about how they're executing their oversight to discuss their involvement in the CAM process.
I was just trying to see if there was a way to sort of circumvent the questions by addressing them, ahead of time.
Well, and I would imagine that hopefully the CAMs are drafted in such a way that they don't promote a lot of questions, that they will be self-explanatory. But the fact that they're new, I think people will be curious.
So the CAQ usually has publications of some kind that sort of recap the audit reporting model, and you said that you'll have something new coming out in December. What's available today that somebody, if they want to find out more information?
Sure. On our website at thecaq.org, we've got 2 publications right now related to ARM. One was issued in December of 2017, which went through the Phase 1 requirements, which were mainly about auditor tenure and updates to the form of the report, or the opinion, if you will. And then one that was issued in the spring of this year that focuses more on CAMs and key concepts of the CAM, as well as some early frequently asked questions that audit committees and others may be thinking about as this is coming down the pike.
Well, Catherine, thank you for taking the time on joining us today, and we'll certainly try and remind our audience that in December the CAM information will be available, but I appreciate you joining us.
All right, thanks, TK.
And that will conclude this edition of Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week when we take another critical look at an important topic that'll help you be a better board member or committee member. So we'll see you then.
Join us again next week for Inside America's Boardrooms, brought to you with Knowledge Partners, Diligent, PwC, Center for Audit Quality, Spencer Stewart, the Conference Board, and Corporate Board Member, along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, Donnelly Financial Solutions, and the Society for Corporate Governance.